Hello everyone, welcome to the ichimokucharts.com daily analysis for the Aussie dollar US dollar FX for Tuesday, May 14th, 2013. Well, a continuation of the trend to the downside today, and what a dramatic last couple of trading days for this market. Prior to that, we saw the market interacting with the very solid $1 support level. The market traded down through there, but the buyers came back in, which is what we'd expect to see. With that candle, we had another black-bodied candle, but the sellers failed to maintain control, and that did suggest that there was a possibility of a change of trend, but very solid resistance overhead. Looking at the market, however, for the previous two trading days, we've had very solid bearish activity down below that $1 round number level. And for the past 2 days, the market has found now resistance at the $1 level. And this is a fine example of how support and resistance can change their role. So as we're trading down, we're expecting the buying will come in down around that $1 psychological level that market participants will think, well, this is very good value now in this market. But it's interesting how perception can change so quickly that now for these 2 days, as the market was trading up at those levels, the market participants were saying, well, now $1 is not good value anymore, and value lies further down below that. So we've seen very strong price rejection down from that $1 level. Now the market has interacted pretty much with this support level around 98.59, almost traded at its lows down around that level, actually down to 98.76, but the significance of that is very, very important for this market. No decent buying coming in around that level, however, but as the market did test up to the $1 level, we saw the bears just take total control of this market and close the market with very strong control. So potential for a test down to 98.59 for tomorrow's trading is very real. Now, having said that, if we do see a very solid bearish breach of 98.59, we don't have any solid resistance until this market trades down to 96.62. So that is the real danger here. That and if you're short, that's a nice danger that would be quite pleasant. But really, no decent support levels down below there. This market could very, very quickly trade down to that level if we see solid bearishness coming into this market. Now this market is looking a little bit overextended at the moment. We've had a series of black body candles for pretty much the past two weeks, and it does suggest that the market may be looking a little bit overextended. Markets do need to take a little bit of a rest, and the rest that we're likely to see here, if it does occur, and there's no guarantee that it will occur, and that will depend on the support around 98.59, the likelihood is that we will see some sort of a congestion area, because it's unlikely that the market will close up above this $1 level. Now that it is acting as a very solid area of resistance, and we have seen very strong price rejection from that area. But for today's trading, obviously solid bearishness and a test down to 98.59 or even perhaps below is a strong possibility. Now in terms of the Fibonacci extension, and we're examining this very long first time frame downtrend and comparing it to the previous time the market was trending down, and this market is now trading down through the 261.8% level, and we have traded through there in a bearish manner, and that does suggest that there is a possibility of the market trading to lower levels. We've seen no buying coming in on the current candle that's finished trading. The sellers have closed with control. They've shown very strong commitment. The buyers lost commitment as they were trading up above or to around the $1 level, and sold off very strongly to close down below that level. So there is a possibility of the market testing down towards the 423.6% level, which is at 96.31. So if we do break through that barrier that we mentioned previously, this area around 96.30 is very, very important level. Now, in terms of the Fibonacci retracement, we're in an expansive mode of that, have been for quite some time, and now the market today tested to the 423.6% level and has managed to close through there in a bearish manner. And this really does give us some sort of a hint as to how bearish and perhaps how overextended this market is at the moment. It's very rare to see markets testing down below these levels, and we're not seeing any buying coming in. The sellers are still in control. Our target is the 685.4% level down at 96.30, coinciding with the other Fibonacci technique, and in a very strong area of prior support. So very strong support expected down around that level if the market does trade down around there. In terms of Ichimoku, obviously a bearish market in all three timeframes. The market's trading down below the cloud, so we have an overall bearish bias in the long-term time frame. The market's trading down below the Kijun-sen, the pink line, so a bearish bias in the medium-term time frame, and the market's also trading down below the Tenkan-sen, so a bearish bias in the short-term time frame. The Chikou span here, the orange line here, is below the corresponding price action, so it's confirming this negativity that we're seeing in all three timeframes. And just looking at the angle of both of these Ichimoku indicators, the Kijun-sen and the Tenkan-sen, both are pointing down very sharply. Looking at the this last bit on them, that's reflecting this unfinished candle, so there is potential for it to point flat, but this candle hasn't finished trading, so we have to ignore that. But looking at this angle here on both of these lines, very, very sharp downside momentum from the sellers, and telling us something about the strength of the sellers in this market and the lack of strength from the buyers. Now, as I've mentioned with the S&P 500 also, the Tenkan-sen tends to be the first place that the market finds support in the case of the S&P, but in the case of the Aussie dollar, the Tenkan-sen will be the first area that the market will find resistance, and it will be very solid resistance, and that tends to happen very often when we see this solid downside or upside momentum, and that's trading at 100.98, so very, very solid resistance up there if the market does trade through the $1 level, but it's certainly unlikely that the market will trade through and close through the $1 level. Still is a possibility, but we should expect very solid resistance up around that level. So the story here is very strong negativity in this market. The market is looking a little bit overextended. We have very solid support at 98.59. If we see strong bearish activity down below there, we could quickly see the market testing down to 96.62 or down to around the 96.30 levels based on the Fibonacci techniques. But the market is also bound to the upside by the very strong psychological level at $1. So we do need to watch how the market reacts to these levels and be ready to act ourselves with regard to the tests to or above or below those levels.